Hey friends, do you consider yourself a trend trader? So if so, then you realize how important it is to spot a potential trend early and jump on the board, right? So today I'm going to give you some 100 tips or ways that can help you recognize an emerging trend early enough so that you can take full advantage of it. So sounds good, right? So let's begin. There are going to be like two ways you can actually use to identify the trending market, right? So first, swing highs and swing lows. Okay. So when the currency pair, when the currency pair prices make continuous highs in the market, it is termed as an uptrend, and this signals traders to place longer trades, right? So this is what I mean, right? So when the currency pair make continuous highs in the market, right? For example, continuous highs, that we mean higher highs and higher low, right? When it is that breaking highs continuously like this, right? So this one, it is termed as what, an uptrend, right? So cause it is just breaking highs, it breaks the previous highs, right? So whenever you come here, there is this break of this high here. When you come here, there's this break of this high here, right? So this is what we call an uptrend, right? Whenever it makes a break of structure. Okay, so also if you come to your market, you can also be able to identify an uptrend. So this can help you at least to trade with a trend, right? So if you come to your market here, you'll see that you'll be able to see some continuous highs, right? So that is a higher high, this is a higher low, this is a higher high, this is a higher low, right? So there are continuous break of these highs, right? So when the market comes here, there is this break of this continuous high. So this one, it is termed as an uptrend, right? Because there is the break of continuous highs, and this one signals traders actually to place longer trades, right? So whenever the trader comes there to the market and hey, we should identify that this is an uptrend, so this will be a good signal for this trader to place longer positions, right? So this one, they will just place long positions and they move with the trend, right? So and when they make continuous lows, right, the trend is termed as a downtrend, and this one signals traders actually to place shorty positions. What do I mean by this? So when the market makes continuous lows, right, like this, it just breaks lows like this, it breaks dizzy like previous lows. Okay, so when the market moves like this one, it is termed as a downtrend. Okay, this one we shall call it a downtrend. Why? Because it is just breaking these previous lows, right? So this one, if you come to the market here, you will see that this was a break of the previous low, this was a break of the previous low. So when you come to the market, also you'll be able to see this market, right? Like if you come like here, you'll be able to see this downtrend. So this one, it will signal traders to place shorty positions in the market. So you'll see that there is this higher high, right? So sorry, lower low, lower high. This is a lower low, this is a lower high, this is a lower low, this is a lower high, this is a lower low, this is a lower high, this is a lower low. So this is a downtrend, right? And if the trader comes to this market, the indication, like, it will show him that actually this is a downtrend, right? So it will signal him to press shorty positions in the market, and he goes with the trend, right? So in it, trade with the trend. So that's the first way you can actually identify a trend, like you can identify a trending market. And by the way, before we can conclude with this first method, also when the currency pair prices fail to follow a particular direction, right? There is a scenario where the currency pair will fail, it will fail to follow a particular direction in the market. So this market is said to be in sideways trend, and it does not send any signal to the traders, right? So when the trending market breaks, sorry, when the market it is in the consolidation, call it a consolidation, right? Here, when a trader comes to the market, right? So he or she will not actually trade with this type of market, right? You just look for trending market, right? So cause this one, it is just a consolidation, or it is in the range. Okay, so as you can see there. Okay, so another way you can identify like a trading market is by using actually these moving averages indicators, right? So sometimes we don't recommend, like, if you trading pure price action to use indicators, but these two moving averages can actually help you to identify a trending market in bed. So this one, we're going to use two moving averages. First is a 50 exponential moving average and a 200 exponential moving average, right? So let's add them and see how to use them, right? So this one we must use the 50 moving average, and here you come, the method you change to exponential moving average. Here length, actually it is a 50, right? So chart, your time frame, all the time frames, right? So you do that. Then you can also change the color if you want. You come here and you add another one, that is a 200 moving average, right? So you come here, you add the 200 moving average, right? So this is a exponential. And also the frame, you can just come here and you change the visibility, right? You just change the color. Yes, right. So you change the color to maybe red, right? So you come here, you change to red. Okay, yes. So now we've added these two moving averages, this 50 and a 200 moving average, right? So after here, how do you use these two moving averages to identify a trending market? Okay, so here when the market is above these two moving averages, that's when we shall consider it as an uptrend, and when the market is below these two moving averages, we shall consider it as a downtrend. And when the market is just between, right, these two moving averages, actually it will be a ranging market. Okay, so now if you come here, all right, so let me do like this. So if you come here, right, so you will see that here the market was was up, actually was above these two moving averages. This is a 250 moving average, and the market was above these two moving averages. That means it was an uptrend. Okay, as also if you add your price action lows, you will see that it was making higher highs and higher lows, right? Means it was in the uptrend. So if you add the confluence of these two moving averages, it will just help you trade with the trend. So uptrend, and when the market, like when it is just above, you can see, right, when it is above these moving averages, it will be an uptrend, right? It will just move above that, like it will just move above, right? And if it is below, it will be a downtrend, right? So all this, it was just an uptrend, just right. So as you can see here, I want to show you a downtrend, guys, right? So here it was just below, it was trading below these two moving averages, and we were considering it as a downtrend. As you can see, it was breaking lows, and if you add this conference over these two moving averages, it will actually help you trade with the trend. So those are the two ways you can actually use to identify a trending market, and you trade with the trend, right? When you can, there's just no better feeling than that as a trader. So this is Jimmy. Stay safe and goodbye, guys.